right. Joining me is Stephen McClurg, CEO of Canary Capital, who is a brand new digital asset investment firm that officially launched at the beginning of October. And I'm guessing many of you will likely be familiar with Stephen from his time at Valkyrie. So that was a firm he co-founded. He also served as their chief investment officer. But he's now launched this new firm in Canary that currently has 4 spot crypto ETF filings with the SEC, including for Solana, XRP, Litecoin, and HBAR, which we'll certainly get into those. Stephen, welcome to Crypto Prime.
Hey, Nate, thanks for having me.
You know, it's so funny because you and I have connected a few times on my other podcast, ETF Prime, where we have discussed spot Bitcoin ETF filings. And I was thinking back, that was several years ago. And now here we are talking about HBAR and Solana ETF filings. And I feel like on one hand, it's been a decade going through all this. But on the other hand, it just feels like life comes at us really fast. But how have you been?
No, I've been fantastic. It was, I did not get a break at all last year, as the Bitcoin ETFs were launching. So, I think we found out from the SEC in October. And we had no Thanksgiving, no Christmas break. It all kind of ran together, and then, a lot of activity. And then I got to take some time, which was great.
Well, and now here you are starting a new firm. You probably miss Thanksgiving. You're probably going to miss Christmas as well with all of your endeavors. And I guess that's probably a good place to start. I was thinking back with your spot crypto ETF filings. I saw some comments on X to the effect of, like, who's Canary? Who is this firm? And that wasn't meant as a slight. It was just that you sort of burst onto the scene with these ETF filings, a couple of which, by the way, you were first to file on, and we can talk about that. But I think that caught people's attention. And so, your name was out there. You had some headlines in mainstream financial media, but introduce yourself to the world. Who is Canary?
Yeah, well, really what Canary is we're an active manager. That's really my background is actually active management, hedge funds is the world that I come from. And when I initially decided to launch Canary, I actually had no desire to file any ETFs. I started with a hedge fund, which I've been running crypto hedge funds since 2008, and decided it was a great time to launch a crypto hedge fund again. And so that's really how we started. It was really intended to be crypto hedge funds and then investing in Bitcoin mining and other types of mining opportunities. And then I just saw an opening and was like, okay, there is a chance that something could get done here, and also saw kind of a chance to buy a call option on Trump being elected president, which could change everything. So we decided to jump right back into the mix, and here we are today. Everybody probably, like you said, knows us for the ETF filings, but really what we're doing is actively managed accounts and private vehicles.
And just talk a little bit more about your crypto origin story, which I always like covering on this podcast. I mentioned at the top you did previously co-found Valkyrie. That's a digital asset focused investment firm. I believe they're now owned by CoinShares. But the point being that, as you were alluding to, you're definitely not new to crypto. So perhaps talk about that and how you first got involved in the space.
Well, what's crazy about how I got involved, it's very accidental. Everything was. You just have to be open to things when you see things happening. But I took a break from traditional financial services back in 2007 to work at a video game company called Electronic Arts. And very specifically, I was working in the mobile games division doing basically corporate strategy when the iPhone came out. And so I jumped in real deep into, utilizing my behavioral economics background and trying to develop, new ways of looking at video games, particularly for the iPhone. And I got in really deep in the world of digital currencies through that. And anyway, when Bitcoin came out, and I first heard about Bitcoin really in 2010, I was like, oh, this makes sense. It's a digital currency. And what what is really interesting about that is when I my time at Electronic Arts, when we built games, we would build them around the world. So you would start with an idea in Los Angeles, and then when that ideation phase was done, you would send the code over to developers in Montreal, or vice versa. But they, developers in Montreal, developers in Prague, developers in Australia, in India, and you were building games literally around the world 24/7. And the hardest part about that was paying people. So you would pay a dev shop in Prague, and you'd have to transfer money over there, currency to currency, and then they would have sub allocations out to other countries such as India, and then they would have to then convert their currency. By the time you converted all the currency, you wasted about 20% of the actual expense. So I was like, oh, Bitcoin, it's easy. It's currency for developers. you know you're building products around the world. Why not have a currency that works around the world, that doesn't have to be constantly changed from one currency to another? And anyway, that all made sense. But when I really started digging deep into it was in 2009. I went back into traditional finance, working at Guggenheim Partners. So I was a portfolio manager over there, mostly running active bond strategies, and I was also head of emerging markets. My boss at the time was a guy by the name of Scott Minerd, and we were also workout partners at the gym, right? So we would be at the gym talking about different things, and one day we were talking about Bitcoin, and he's like, we need to dig into this a little bit more. This is quite interesting. This was 2011, I want to say 2012. So we together really started digging in, and he really liked the idea of digital wallets, an idea of digital gold, because he was already a gold bug. I already had the concept of, virtual currencies. So we talked a lot about it, and we were trying to decide, is this suitable for our clients? We decided it probably wasn't suitable for our clients at the time, but we both bought some Bitcoin, So anyway, we've been buyers of it and interested in it, kind of geeks, for a long time. And then, I don't know, about 2016, I decided, all right, it's time to leave, the boring world of bonds at 1% interest, where rates are at the time, and jump into cryptocurrency. So I went from being a bond manager to working at a early stage tech company that was building blockchain solutions. Learned a lot, and then decided, I'm asset management's where I'm at. I'm going to manage crypto.
You really made the TradFi to DeFi, switch, if you will, right? You're like that's a perfect example. And I love how early you were too, by the way. A lot of times when I ask people this question, they'll say, it's pretty early in 2017. You got involved in 2010, which is pretty remarkable. Going back to Canary, I saw in conjunction with launching that firm, you also launched your first trust offering, which is the Canary HBAR trust. So this is a private offering that provides qualified investors with exposure to HBAR, which that's the native crypto asset of the Hedera network. Two questions here. Number one, maybe just offer a quick overview of Hedera. I don't think everyone is familiar with that. And then two, what made you decide to start here? Why HBAR for your first trust offering?
Well, here's the thing, when we were at Valkyrie, the obvious, we looked at the things that were obvious, right? The things that were, marketable, things like Bitcoin and Ethereum, and even, a couple of others that were, kind of broad market everybody was looking at. And when I took a break before starting Canary, I actually traveled to Tokyo and Korea, part of my old stomping ground from the TradFi world, to see what was happening in crypto over there. Because I don't know if you saw this, Nate, but when it comes to trading pairs, you usually think that, okay, the US dollar is the dominant trading pair for Bitcoin and other cryptocurrencies. But for several points in time, the Korean won is the dominant trading pair. And it actually took over as the dominant trading pair in Q4 of 2023, Q1 of 2024. And I said, look, I've got to get over there on the ground, see what's going on, see what they're looking at. And I already had it in the back of my mind that HBAR was quite interesting because it had real enterprise applications. We've already established that Bitcoin is the king cryptocurrency. But what about enterprise applications, which is really the next step here? And not only was I looking at it from that perspective, big industrial uses, enterprise uses, it's a little bit different than your typical blockchain. But when I was in Korea, I realized that it was a top 5 traded token. And there was also a lot going on there. And by the way, that's also how I got to focus on XRP, because it's another one that's huge in Japan, huge in Korea, and they usually lead the way in technology. Those two countries. I mean, that was something I learned from my days in video games, right? Those two countries led the way in video games. They had a version of the iPhone 5 years before we had the iPhone. They were using it for consumer purposes when we were still on commercial over here back in 2007. So that's really what stuck with me was, okay, HBAR. Nobody else is looking at it. I've got an opportunity to be first if we do something there. So let's go out and lead with one of the leading enterprise blockchains that I don't feel like anybody else is paying attention to.
And we'll talk a little bit more about your ETF filings here in a moment, but you do currently have a filing for an HBAR ETF. You're the only one out there who has that filing as we sit here today. Is that an uplisting of the private trust, or would this be a new offering altogether?
Yeah, I mean, we're contemplating a dual path solution. I mean, if you Grayscale brilliantly listed a lot of trust OTC and then converted them to national exchanges. And our idea is, potentially if we can either, try to go the approval route with a straight ETF, or start with the trust. And if we can't get approved that route, then we can uplist a trust. And so that's really the way that we were thinking about it.
Okay, that makes sense. And again, we'll get into the ETFs here in a moment. I want to keep talking about some of the existing offerings that you have. So you do currently offer an actively managed crypto fund, the Canary Digital Fund. This is available to accredited investors. Do you want to briefly describe the strategy behind that?
Yeah, I mean, really, what it is, it's a strategy that I've been running for a while, but what our focus is a barbell strategy between bonds and crypto, which not many other people are doing right now. And given my background in bonds, which was what I've done most of my career, is in times of when things are flying like right now, we're going to be more heavily allocated to the barbell side of crypto. And when we're in 4-year cycle bear markets, we'll be more heavily allocated to bonds. So it's actually a strategy that we've employed over the last 2 summers, moving almost entirely to bonds and trading bonds while we're waiting for crypto to recover during those 2 periods of cyclical downturn. So yeah, it's a barbell strategy between the two, and we've got a good team that's trading crypto on the one side, and then we'll probably jump back into bonds. I don't know. I'm thinking the top of the cycle is probably going to be somewhere between June and October of 2025. So we'll start mitigating that risk through bond allocations.
Okay, and then just in poking around your website, the other thing that I saw was that you've built an index, right? The equal weight altcoin index. Do you want to tell us about that? That certainly caught my attention.
Yeah, it's something we've really started just playing around with. I mean, I've built indexes for ETFs for, I don't know, the last 15 years. So we kind of put our heads together and decided, hey, let's think through what an equal weight index might look like, and if we want to apply it to a product later down the road, we could. But let's at least build the index now, start tracking it, work out any kinks, and it's also a good tool for us internally. I remember when I was in my Guggenheim days, we had bought a company called Ridex that had the equal weighted S&P ETF, and what was interesting about that product was it often outperformed the S&P, and just because of the way that it rebalanced. So in my head was like, okay, we've got this index that, this crypto index that we're trying to beat in our hedge fund. But why don't we create an index for equal weighting and see if we can beat that too, right? So that's kind of the real test, is trying to beat both of them at the same time. So it's just something kind of we did for fun, but it's something that we might apply later.
What are some of the coins in the index, or how many coins are involved?
Yeah, so really what we're focusing on is the top 20, the largest cryptocurrencies for the most part. We do have a way of eliminating certain tokens that either can't or won't trade in the U.S., whether it's regulatory issues or they don't have a long enough history. And and we also have different categories that we're looking at too. But we want to make sure that there's trading volume behind it, that it's not just some, like EOS is a good example of kind of like a ghost token that's been sitting out there since the 2017 ICO scams. And but something that's just not sitting out there and nobody cares, nobody's trading, nobody's building on it. So we've got different qualifiers in there that help us decide which ones are which ones, and they will, certain tokens will come in and out over periods of time based on trading volume, based on market cap, based on usability.
Okay, so I think we've made everyone wait long enough. Let's come back to the ETF filings now. And look, as I noted at the top, in addition to the HBAR ETF, you have filed for a Solana ETF, an XRP ETF, and then there's a Litecoin ETF. And with a Litecoin ETF, again, as we sit here today, that would be the only filing that's out there, just like with the HBAR ETF. But I'd love to have you talk about the prospects for approval. You mentioned earlier there is a lot more optimism now, essentially that the Trump administration will take a much friendlier approach to crypto. But I'm curious, in an ideal world, how would this approval process play out? Because we don't have CME traded futures on any of these digital assets, which I know that's not a prerequisite, but that's the path that spot Bitcoin and spot Ether ETFs walk. We don't have futures-based ETFs. So how do you think this approval process would look like? What is the path here?
Yeah, and that's actually, obviously really good observation, and you've been all over this, covering this, but those, I guess you could say milestones that that the SEC had put in place, saying, well, until there's a futures market, we really don't care. We're not going to approve anything. Those are sort of false positives. It's something that they put out there to help them, give an excuse or restrict, more tokens being filed for, because, you could imagine 2 years ago, people would have just filed for a bunch of different things, and they'd have to, answer a lot of questions. So it kind of helped them, kind of regulate, the number of token ETFs that got filed. But there really is no plausible reason to have a futures market for an asset that you're filing an ETF for, and I do think that that's going to change in the future. So I don't expect that to be a qualifier after this coming year, but I also don't expect there to be a major futures market in the U.S. for any of these tokens that we're talking about that are I would call them kind of second tier, as far as market cap goes. Now, there are futures markets for these assets globally, whether it's through derivatives or through Coinbase, but not on a major exchange. But we actually don't expect that that's going to be a blocker for us.
So what does need to happen then? I mean, is it as simple, and I say as simple, it's more complex than that, but as simple as a clear designation as to which of these assets are securities versus commodities? Is that the first step? I'm just trying to think, again, how do we walk that approval path? And I agree with you. I don't think we need a futures market to make that happen. But what do we need?
Well, and you said it, right? Are they securities or are they not securities? And we probably do need some kind of clear delineation of what is and what isn't. And right now, all we have is a series of lawsuits and enforcement actions, mainly on exchanges, saying that, well, we believe that you're, allowing the trade of securities, and here are the tokens that we believe are securities, but none of that has been proven. It probably needs to be proven by courts, or there needs to be a very, very clear standard of what is and what isn't. I do believe the SEC will get there very quickly. And I do believe a lot of tokens out there probably are securities. So we're trying to avoid those. Some of the coins, of course, that you mentioned, we don't believe are securities. Again, that's just our belief. We could be wrong, but we don't believe anything that we've been looking at are securities. So yeah, but that clarity, that clarity does need to occur before some of these get launched. Now, it doesn't mean that it can't be launched as an ETF, because in a 33 Act ETF, which is where all the spot ETFs are so far, you can't be a security. As a matter of fact, to be in a 33 Act. Now, there could be a token that is claimed to be a security and say, okay, fine, we'll put that in a 40 Act. 40 Act ETF has to have at least 40% of its assets to be a security. So really, it's not a disqualifier from being an ETF. It just all depends on what type.
And I don't want to put you on the spot, and you have a free pass if you don't want to answer this question, but is this something that you think could occur in 2025? Are we looking at 2026? Can you give us any sense in terms of a time frame of when these products could come to market? And I know there's, again, a lot of variables here, certainly.
Well,
yeah. How do you think about that time frame?
Yeah, look, I'm going to say that, first of all, I don't know. And so if I did know, I probably wouldn't answer the question. But first of all, I don't know. But I'm only going to speculate. But kind of seeing what I'm seeing as far as changes in the SEC, changes in regulation. We've had a complete flip from in the House, the Senate, and in the executive branch to full Republican support, and the Republicans do seem to or not seem to be, but appear to be supporting crypto wholeheartedly. Doesn't mean that Democrats don't. There's some that do. There's some that don't. But they seem to be more against it. So it does look, based on that, based on the political makeup, and based on what we have today. Look, I think we see probably 2 or 3 new spot ETFs for tokens in 2025. I don't think all of them that are, when I say not just myself, but others that have filed, probably not all of them will get approved. Not all the tokens will get approved in 2025. They'll probably run into 2026. But yeah, I think we could see 2 to 3.
And I just want to be clear here again, not to belabor the point we were talking about earlier. I mean, does this come down to just a proper classification of these underlying crypto assets, and then that'll allow them to be held, say, in a 33 Act ETF? I just want to be clear, what do you view as a linchpin here?
I think that's what it will take, because the strongest tool that the SEC has right now is that when you file a 33 Act ETF, you also typically have to file a 19B4 for, it's a rule change application for the exchange. And since the SEC controls the ability to approve or deny those 19B4s, they can hold up these applications indefinitely, as we saw with Bitcoin and with Ethereum. Now, so beyond any kind of clear framework or clear list of what is and what isn't, and by the way, the SEC would never do that. They would never say, hey, here are the list of tokens that are, here are the list of tokens that aren't. That would have never occurred in any industry, let alone crypto. They leave it up to you as the asset manager to analyze something, give your written opinion on it, and then have to back it up. So, but outside of any kind of clear guidelines, it would be tough. But I think we will get clearer guidelines, and probably in the next 3 months.
Okay, and then the other question I have on this, and we can move on, is, and this gets a little bit technical, but I know you're very familiar with these surveillance sharing agreements. So right now, obviously, the crypto exchanges are not regulated, at least not by the SEC's definition. And so let's say in XRP or Litecoin or HBAR, let's say those are deemed non-securities, okay? And We still don't have a regulated futures market. You and I talked, we don't necessarily need that. But my point in bringing that up is that we can't rely on a regulated futures market for surveillance, right? Because let's say it doesn't exist. How would the surveillance work here? Or do you think in this process of essentially designating which crypto assets are securities versus commodities, there would also be a framework put in place to regulate crypto exchanges? Like how does that work with the
Yeah.
surveillance?
Well, and maybe what I'll do is use an example in TradFi, which is what I always like to do. So back in 2010, I launched a Build America bond closed-end fund, and I don't know if you remember that asset, but it was created in 2009 by the Obama administration right after the financial crisis to help municipalities raise money because essentially the munis market froze up, and what Build America bonds were was a federal a pledged federal subsidy against bonds that munis would offer. But what was unique is typical munis are tax exempt, but Build America bonds were not. They were taxable, and they made them taxable so that it could go into the hands of people that actually couldn't even use the tax exempt credit. So that more corporate institutional support would be behind these. Now, so that was a very thinly traded market, as you can imagine. They're these really chunky one-off bonds, and they did not have real surveillance. So what we had to do now that you're putting a private instrument to a public vehicle that's very thinly traded, we would have to go back and report every time we would trade a bond in these Build America bond funds. We would have to report the price within 15 minutes back to the market. And then that would actually create price surveillance. And we did that through Bloomberg. Crypto, really all you need for that transparency and pricing, which you need that pricing at the end of each day to strike a NAV on the ETFs, is some legitimate aggregator of price. So, for instance, for the Bitcoin spot ETFs, there's a couple of indexes out there that aggregate prices across OTC and exchange markets, and really that qualifies for surveillance. I mean, I remember kind of early on in our 19b4 application with NASDAQ, we proposed this whole NASDAQ Coinbase surveillance agreement, and us and BlackRock were the two firms that did this with NASDAQ. And we thought that we were going to get a leg up on everybody else and we'd be the first ones in because we had this and nobody else did. Anyway, SEC didn't care.
I remember all that, by the way.
We thought we were so clever, Turns out we weren't so clever because we launched with 10 other people. But anyway, long story short, the SEC wasn't really concerned. It really, there was an index that aggregated all that data for you, and that's what everybody ended up using, was one of those indexes. So as long as we have an index provider that's aggregating that data for each one of these tokens, it qualifies as the surveillance that's needed in order to have adequate pricing for NAV strikes.
You mentioned having to compete with, say 10 other issuers on the spot Bitcoin ETFs. And we talked earlier just about how you have burst onto the scene here with Canary with these 4 filings. I'm curious, let's say the SEC does get comfortable with some or all of these filings and they're approved. How do you think about the competitive environment? Because to what you were alluding to with the Bitcoin ETFs, I have to assume, Stephen, that the larger, quote unquote, more established players are going to try to jump in here. We've seen a little bit of that already just with some of these filings. And obviously you're very well versed on competing in the quote unquote ETF terror dome, but how do you stave off the competition, or how do you think about that?
Well, in the past, every time I've ever been involved in an ETF launch filing or closed-end fund or whatever, whoever files first is usually the one that actually launches first. People go in order. Bitcoin was really, the Bitcoin related products were the ones where the SEC arbitrarily changed the rules, and it certainly favored the big firms over the small firms. And frankly, I think that there's going to be a pretty big reckoning around that over the next couple of years. But the SEC needs to go back to the way that business was done before, and not have that type of favoritism. so, so really, our hope is that the people that come up with an idea get out there first. They're the ones that get to launch first, and that is the competitive advantage. You understand the rules. You put something together. You work hard. You put it out there. For Bitcoin, it should have been VanEck. VanEck should have gone first. And I don't think anybody disagrees with that. That's really watching this thing. They filed a Bitcoin spot ETF about a week before Valkyrie filed. We should have been second. And so on and so forth. Even Bitcoin futures, we had filed first, and then they kind of changed the rules and let ProShares go a few days before us, and then everybody else kind of followed suit. So we got to go second, even though that we were first. But the SEC has really been favoring in the last few years the bigger shops, and that really needs to end. And I think it will end under the new administration.
Yeah, I 100% agree with you. This was a real sticking point in my mind when I saw how these were lined up, and that, I've covered the ETF space for long enough now to know that a lot of the innovation does come from smaller ETF issuers. They're very entrepreneurial. You have these upstart issuers that come up with these great ideas. And I'm a believer, if you come up with that idea and you file first, you should come to market first. It's pretty simple. Yeah. Otherwise, you are providing an enormous advantage to the larger issuers. Because if I'm a larger issuer, why not just sit back, let all of the other, these entrepreneurial smaller issuers come up with all these ideas. And if I know the SEC is just going to line us all up at the same time to launch, I can just pick off the best ideas and put my resources into those. So it never made any sense to me that's the way it was approached. And your comments around there, potentially being a reckoning, I think are very interesting. I'll be fascinated to see if anything comes of that.
Yeah, no, I certainly hope there is. But frankly, that's why Valkyrie didn't participate in the ETH ETF, because we just knew the same thing was going to happen, and BlackRock was going to run away with it all.
Yeah, you're just at a disadvantage at that point.
Yeah, so we just stayed out.
All right, with our remaining time here, I'd love to just get your thoughts on the broader crypto markets right now. You look, we have Bitcoin nearing 100,000. XRP's gone on an enormous tear here recently. You look across the entire digital asset landscape, a lot have been, moving up fairly substantially. What are you seeing right now?
Yeah, so really, what I'm seeing is there's a lot of Bitcoin being held by market makers and prop shops. And, everybody keeps talking about the psychological level of 100. It's not so much a psychological level. It really has to do with hedging. And until options expiration hits, the first round is, I believe it's December 18th, which, by the way, also coincides with the next Fed meeting, which is the 17th and the 18th. I don't expect us to likely break that $100,000 barrier, because there's too many shorts at 100,000 hedging their long Bitcoin positions. So until those roll off or expire, the market's just going to continue to be pushed down. Now, for some reason, if it were to cross that barrier, we're talking about a massive short squeeze that could take Bitcoin to 120 in very short order. That being said, I still believe that 120 is that's my target for the end of the year, which we could hit after that time frame. What's also interesting is there's renewed interest in some of the more enterprise solution blockchains, as well as Litecoin, which is really interesting. Charlie Lee has gotten back involved with the Litecoin Foundation and with building on top of Litecoin to really make it something that's kind of a smaller, faster, maybe less secure, and not even a competitor with Bitcoin, but something more like what he's always imagined it to be, the silver to the gold. But also the enterprise platforms like Ripple Labs is building really cool things right now. They probably have a lawsuit behind them. It's under appeal now, but we'll see what happens. HBAR, as we've talked about earlier, doing a lot in enterprise. I mean, those are the things that I'm really interested in. Is what's next? Now that we've got a Bitcoin spot ETF, what's next? What are enterprise solutions being built on that aren't necessarily currency, but more solutions for real life needs outside of a global currency.
As you look at a 2025, any particular macro drivers for crypto overall? We talked about the regulatory environment. Clearly, that could be one. I think that's probably a lot of that is priced in at this point. Maybe not all, but we could see these ETFs come to market. We'll see what the Fed does with rates and how they handle that and what happens with inflation. But just high level, any other macro drivers you're keeping an eye on?
Yeah, absolutely. Inflation is a high tide and it lifts all boats. So we continue to see inflation. It hasn't really subsided, even though CPI prints seem to be lower and lower. Inflation is still very much there. Food cost is still high. Travel cost is still high. Energy cost is still high. And it's not just in the U.S. Other countries are experiencing it more. Germany, UK, China are all technically in recessions right now with high inflation. So those inflationary costs are just going to drive up risk assets. So 2025, it should look like, typical Bitcoin cycles, where it's the last year of the cycle of the bull side of the cycle, but also it coincides with inflation, and inflation should drive these assets to new highs all throughout 2025.
Well, I, for one, am very excited to see what happens in 2025. I'll be tracking these spot crypto ETF filings very closely. So best of luck to you on those. We'll have to touch base as things progress. But Stephen, thank you for joining me this week. This was a lot of fun.
No, absolutely, Nate. And I'll be close now, and I'll be following you closely because you're one of the best analysts out there that follow these things. So I actually get most of my information from you. So thank you.
Well, thank you. I appreciate that. That was Stephen McClurg, CEO of Canary Capital. Hope everyone enjoyed this episode of Crypto Prime. As always, please leave a review or give us a like wherever you're listening or watching. Apple, Spotify, YouTube are pretty much available everywhere. So give this a like, and I'll see you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of the investment advisory firm The ETF Store. While OTR Media LLC and the ETF Store are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by the ETF Store. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the potential loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit CryptoPrimePodcast.com for more information.